Right, so onto the markets. The JSE All Share more than 2/3% in the red. The dip is in line with global markets as investors become anxious over the continued surge in coronavirus cases. Well, let's just talk about the market activity with market analyst Wayne McCurrie. Wayne, thanks very much indeed for talking to us. So we've had a red day today, and remember we had that midterm budget that came out yesterday, but presumably the red today that we're seeing on the markets has got everything to do with international factors, very little with local factors, or am I wrong?
No, you're entirely correct. And the same as yesterday. Overseas markets are quite jittery given this resurge in infection rates and the US election coming up. So the market's cautious, and all the weakness that we've seen yesterday and today, 90% is overseas. You can make an argument that the SA banks down today could be related to the medium-term budget, but they were up 13% last week in total. So, you know, the banks are still well ahead as to where they were 2 weeks ago.
Yeah, because I was going to ask you, we have seen the banks taking a particular hit in recent days, yes, at least. Why is that?
Look, as I said, they surged so enormously last week. I mean, literally a couple of banks were up 20-odd% during the week.
Yeah.
But of interest, Nedbank came up with an update after the market closed, which is in fact very positive. They say that they're not experiencing the same level of bad debts in the third quarter as they did in the second quarter, and that their home applications, their consumer applications for home loans and motor car finances are in fact above pre-COVID levels. So a very positive update. We'll see how the share price reacts tomorrow.
Wayne, why is Sasol losing 10% every day? I've seen that 10% drop since Monday. I mean, is it exclusively just the oil price that's going down? There's got to be more than that.
It's the oil and the rand. I mean, even though the rand might be weak over the last day or two, yeah, the rand's still significantly stronger than what it was a couple of weeks ago. And the oil price is taking a hiding. Everyone's worried that the oil price could fall significantly more. And of course, the more the Sasol share price goes down, the bigger the potential rights issue they've got to do and issue more shares and get more dilution in the actual share base. But understand, I don't know if it's going to go to 60, but somewhere in this region, 60, 70, 50, you buy it in 3 years' time, you probably make a very wise decision.
What do you make of Tiger Brands finally sealing a deal with its value-added meat business to Country Bird? I mean, what is Country Bird buying here? Because, you know, there's still a stigma element attached to that, isn't it?
Yes. Yes, very much so. I mean, I don't think they can put much brand value on it. They might have their own brands they could use or come up with new brands. But it seems as though they're buying the assets very cheaply. I mean, this is a substantial operation.
Finally, just a quick one on the budget yesterday, Wayne McCurrie. We've seen Fitch already telling government this afternoon, listen, we don't think you can be successful in really trimming down this wage bill because your track record's not too good. Other analysts have said if you base the budget on a 0% wage increase for the next 3 years, presumably, then this budget might be not so realistically as initially thought. What's your view?
Well, look, everything depends on implementation. The same thing applies to the state president's economic recovery program. It's all about implementation. But understand, there has never, ever been as much pressure on the government to cut the wage bill. Previous years, they weren't under intense pressure to cut the wage bill because there was always a little bit of squeeze and a little bit of wriggle room that they could do to pay the civil servants. There is no more wriggle room. There's no more space. So they're going to have to do it. If they don't, we will be in serious trouble within the next decade.
Wayne McCurrie from FNB Wealth Investments, thanks very much indeed for talking to us.